get representation of the economy on the Nigerian Stock Exchange?
Let me start by thanking FBN Capital for asking me to speak on today's panel. We had a study late last year to segment the market into 12 industry categories. And what we realized is that agriculture, which accounts for about 40% of GDP, has less than 1% in market capitalization represented on the floor of the exchange. Oil and gas, which accounts for about 90% of the foreign earnings of the government, and I believe about 14 to 15% of GDP, has about 3% representation in market capitalization. And all of that is in downstream oil and gas. So none of the exploration companies are listed.
Recently, you've said you're about to relax the rules around equity investments for PFAs, which was limited to about 25% before. Even if that happens, can you please let the audience know, right, whether in terms of giving them this greater asset allocation, the PFAs will not just be passive investors, and they will take they will take responsibility. They will take the fiduciary responsibility of ensuring that the investments in their care, right, are judiciously managed by the companies in terms of corporate governance, in terms of disclosure, in terms of reporting and accounting. I mean, what things are you putting in place to ensure, right, that investors' money are not just walked away with?
In the coming days, we're going to see PFAs actively involved in ensuring that pension assets are safe and adequate, and they earn adequate returns. We're going to see pension funds asking for board seats, for seats on the boards of invested companies, quoted companies. And there's been a recent development, and the PFAs actually intervened in ensuring the suspension of extraordinary general meeting of a quoted company because of some noted exceptions in some of the resolutions that were to be passed in the PFA, in the company. And we're going to see many more ahead. It's inevitable that there has to be strong corporate governance practices. There has to be high business ethics in the conduct of businesses in the various quoted companies, and it will only get better. And we expect that the regulation, the supervision, the regulatory environment in the capital market is strong. That will give further confidence and enhance investments by the pension funds in the capital market.
Appointing members to the board, I'm sure that is based on, depending on the regulation that allows them to, whether collectively. Do you think they have that depth to be able to represent, or are they going to use proxies?
Over the last few years, to the experience that we had in this market, if you remember the chart that was shown earlier, we had this huge bubble, which was followed by a equally dramatic decline, and a lot of what led to that were the regulatory lapses, as we all in this room know. And so instances of very weak corporate governance, regulators asleep on the job, insider dealings, market abuses generally. And the effect of that, beyond just on the market itself, extends to the psyche of the average investor. And to the extent that the investor believes that the market is stacked, or the odds are rigged against them, or that it's not a level playing field, then the judgments that you make are not made purely on economic grounds anymore. But even when things appear attractive, you stay away because you don't know if the numbers being reported are what they should be. You don't know if the auditors are doing their jobs. You don't know if the regulator is doing their jobs, etc. So I would count that as one of the most critical legs on which to build a recovery in investor confidence. And I must say that I think a lot of progress has been made in this regard. I think that the work that Oscar and his team are doing, and the work that the SEC is doing, are going quite a ways towards instilling a culture of corporate governance. Simple things such as, for example, quoted companies releasing quarterly financials, releasing them in the first place and then releasing them on time. It seems like a very simple thing, but many of you in this room know a couple of years ago, companies might go 1 year, 2 years, 3 years, a listed company, and not release audited financial statements.
To what extent do you think the Nigerian markets remain vulnerable to the international risk, sentiment?
I'd like to pick up, if I may, on one of two of the comments that Oscar made. And it seems to me that particularly when the point of departure is the financial sector, when you look at Nigeria, you clearly have two separate economies, which you might just broadly categorize as old and new. And it seems to me that the Nigeria Stock Exchange is heading in the right direction out of the old and into the new part of that. And your opening remarks about the suspension of some companies, the expulsion of some brokers, this kind of thing is very, very heartening and reassuring for those who would like to see the Nigeria Stock Exchange firmly in the new camp. And obviously some of the regulatory changes in the broader financial sector in the last 3 years or so are things that I would put in the new camp as well. But it's interesting that the Secretary General of the Stock Exchange feels the need to say that the Stock Exchange is meant to be a source of funds for industry. That is, of course, I'm paraphrasing slightly what you said, but that is, of course, what a capital market is. It's not really designed for investors, or shall we call them punters. It ought to be seen as a serious source of capital for industry, for industrial development, new sectors certainly. I mean, agriculture, if one wants to buy exposure to the Nigerian agricultural sector, how does one do that? I mean, I suppose there are various proxies one could use, equipment manufacturers and distributors and things like that, but essentially it's very difficult to do that. So the news about the sort of corporatization, if I can call it that, of agriculture is very good news. But I think, from my point of view, what would secure the long-term health of the capital market here, most of all, continuation of the developments we've just sketched in terms of reform and chopping out the old ways, but IPOs from new types of companies. And when, for example, AMCON comes along and divests itself of its impaired assets, could the Nigeria Stock Exchange be seen as a serious vehicle for that divestiture? And the closer we can get to a point where we can say resoundingly yes to that, the better. Because people know there have been many problems in the past, people are familiar with the negative publicity that surrounds capital markets in this country, but they're prepared to allow the country and the market participants to move on from that. Seems to me that the single best signal that they should do that would be new companies listing, new, serious, transparent, well-governed companies listing on the stock exchange. And I'd be very interested to hear what plans there are to encourage that, whether it's through privatizations, whether it's through AMCON divestiture, or whether it's perhaps through private equity exits.